Hey guys, welcome back to Stacking Stocks, and thanks for tuning in today. So, today is all about Tesla's 2022 deliveries. After a huge 2021, can Tesla continue its staggering momentum next year? The electric car maker's new factories in Berlin and Texas could help give sales a substantial lift next year. However, COVID and the uncertain operating environment it's creating could lead to unexpected challenges for the automaker. So, what's going to happen? Well, that's what we're about to figure out. Let's get started. We all know that it's been a big year for Tesla. The stock surged nearly 60% higher year to date, and that's on top of the growth stock's 743% gain last year. Investors have cheered the company's soaring profits, fueled by strong sales growth and margin expansion. But how will things fare for the company in 2022? An analysis of the company's current momentum and some of the catalysts in place for next year shows that the electric car maker's vehicle deliveries could continue rising sharply in 2022. Indeed, a 50% plus increase in vehicle deliveries next year is not out of the question. So, what are the key indicators leading up to that? Here's why Tesla could grow its deliveries around 50% next year. Now, a look at Tesla's sales growth in recent quarters quickly shows that a forecast for 50% growth in the electric car maker's deliveries next year isn't actually very bold. Consider that in the second and third quarters of 2021, Tesla's deliveries increased 121% and 73% year over year, respectively. While Tesla's fourth quarter deliveries are yet to be determined, simply maintaining third quarter deliveries of about 241,000 would translate to about 34% growth. But 34% growth in the fourth quarter is likely too conservative of an estimate for the fourth quarter, as Tesla's management recently said the company achieved an annualized production run rate of over 1 million cars towards the end of the third quarter. Achieving this suggests that deliveries as high as 250,000 could be achieved during the quarter. Strong sales momentum in Tesla's third quarter and likely in the fourth quarter too sets the company up well for continued strong year-over-year growth rates in early 2022. Another positive thing Tesla has going for it is extremely high levels of demand. Management indicated in the company's third quarter earnings call that demand continues to exceed supply. Furthermore, the company said in its third quarter update that it believes that there's a structural shift happening in which demand for electric vehicles is increasing. The company believes that the more vehicles it has on the road, the more Tesla owners are able to spread the word about the benefits of EVs. And they're very right to do that. We think that having more vehicles makes the EV brand even more popular. With no sign of demand slowing, the company's continued growth next year is highly dependent on Tesla's ability to increase vehicle production rates. Fortunately, Tesla has two new factories it's been building out all year that are supposed to begin producing the automaker's high-volume Model Y vehicle before the end of the year. In fact, the start of production at Tesla's new factory in Berlin, Germany, could be just days away. Tesla is also almost ready to begin production at a new factory in Austin, Texas. The two new factories could eventually double the automaker's manufacturing capacity. Of course, the typical S-curve of scaling production rates at new automobile factories means that production rates will probably be very slow at first. But with production expected to come online at the end of 2021, the two factories could be producing vehicles at substantial volumes by the middle of 2022. Tesla has done a fantastic job mitigating the chip shortages and other automotive supply chain issues facing automakers this year. Its low volume and the commonality between models likely helped avoid major production challenges. New car availability is almost non-existent, and dealers have sold at or above the MSRP the entire year. As a result, used car prices have also gone parabolic. This is a dream environment for any automaker that can maintain production. As long as global production remains constrained, Tesla will benefit and will likely be able to sell every car it produces at high margins, even with additional supply from the Giga Berlin. In addition to the global auto shortage, Tesla in 2022 will likely be getting some major help from the U.S. government in restoring the federal EV tax credit, as the Build Back Better plan includes a $7,500 to $12,500 refundable tax credit for the purchase of a new EV. There are no automakers that need government help right now, and EVs are selling well on their own. But this is a major positive catalyst for Tesla, General Motors, Ford, and other domestic EV manufacturers. If the Build Back Better plan passes with the EV subsidies included as proposed, Tesla will likely come in far above current estimates, especially earlier in the year. Tesla being able to maintain the price and volume throughout the year will be key to watch since Model 3 and Model Y are no longer new to the U.S. market. Tesla's 2021 European sales are also being helped by the introduction of the Model Y mid-year, which was not supposed to be sold in Europe until Giga Berlin was online. Tesla changed its mind and is importing Model Ys from China. Once Giga Berlin comes online and ramps production, will there be enough demand for both factories? Well, we already mentioned the increase in demand for Tesla's products, so chances are that the demand will meet supply. A corollary to the Europe EV demand story has to do with government subsidies and when EU countries may start to pull back from them. We believe this could happen sooner than many expect. Europe's lead in EV adoption has a lot to do with substantial tax breaks in the majority of markets. In many markets like Germany, these accelerated in recent years, partly as a stimulus measure. In the push to greener power sources, Europe has closed many coal-fired plants and increased its dependence on less reliable wind and solar, as well as natural gas supplied by Russia. Electric rates in much of Europe have spiked recently, not just near-term rates, but also longer-dated rates. These kinds of cost increases will show up in a customer's bill. Depending on how bad this gets, it could cause European policymakers to rethink the pace at which the EV transition can happen and allow some of the subsidies to roll off. COVID, of course, has thrown some major curveballs at companies with sprawling global supply chains and high levels of dependence on trucking companies and human labor for product distribution. The lessons of 2020 and 2021 suggest that investors should brace themselves for the unknown in 2022 as well. Supply chain disruptions or other unexpected challenges could always make things difficult for Tesla next year, weighing on sales. What about all these new electric vehicle startups? Well, in a nutshell, competition is increasing from all angles in this EV arms race, which has been hanging over Tesla and the overall sector. However, this is just the start of an EV transformation that will change the auto industry for the coming decades, with Tesla leading the charge. With EVs representing 3% of overall autos globally and poised to hit 10% by 2025, there will be much more competition and a massively increasing share of the global market. The broad takeaway is that the EV market opportunity and green tidal wave will translate into a $5 trillion overall market over the next decade, with Tesla a disproportional beneficiary of the broader consumer adoption towards EVs and AVs over the coming years. Nevertheless, even considering these potential challenges, 50% growth in vehicle deliveries seem possible for the electric car maker next year. And if Tesla doesn't quite achieve this, actual results may not be far off from this mark. 2022 should be a strong year for auto manufacturers, as global supply chain shortages in 2021 have limited the supply of new cars. Tesla maintaining higher pricing with additional supply coming online, both from Tesla itself and competitors, will be the key to watch in 2022. Let us know what you think via the comments section. Don't forget to like, share, and subscribe. Stay safe, and we'll see you next time right here on Stacking Stocks.